Hello friends, my name is Gaurang Shah. I am chartered accountant from Mumbai and today we will learn about advanced tax. See, advanced tax we have to pay on regular basis as a predetermined on the basis of the estimated profits, and we have to pay on intervals, regular intervals. And if we don't pay this advance tax by the due dates, then interest consequence will arise. So to avoid this interest consequence, we have to be mindful that we are paying advance tax on regular basis. So we will just learn about what are the due dates, what are the percentage we have to pay, and to avoid any interest liability. So first installment is due on 15th of June. And how much we have to pay advance tax? We have to estimate our income for that particular year, and whatsoever tax liability arise, we have to pay 15% of that. Similarly, by 15th of September, we have to pay 45% of the tax liability. By 15th of December, we have to pay 75% of the liability. And by 15th March, we have to pay 100% all the taxes. Now, when we look at the interest provision, government has given some relaxation, and that we should know about that. What are those? So there are two sections, section 274B and 234C. 234C talks about first installment where we are paying 15% of tax liability, and when we are finalizing our return, at that time suppose liability is coming to not less than 12%, then also 234C liability doesn't arise. So there are difference. Whenever we are estimating the liability, at that time your tax amount could be X, whereas when we are having actual figures at the year end, then tax liability could be Y. So when we have calculated advance tax based on X, and when we compare with tax liability arising on Y, then there is a leverage of 3%. Similarly, 15%, we have to pay 45% of the tax liability by 15 September, and if we are calculating actual liability and it falls under the range of 36% to 45%, then also 234C liability doesn't arise. Similarly, these are the interest calculation within the installments. What about overall tax liability? Suppose we have calculated tax liability on the basis of estimated profit as say 10 lakh rupees, and when we are actually liability comes to say 50 lakh rupees. So it is very abundant. So what we have to do? So then government says that if your liability is within 90% range, then there won't be interest liability under 234B. But it is going out of that, then definitely taxpayer have to pay interest liability under section 234B. So we have to be mindful that we are taking extra care when we are estimating our tax liability for paying advance tax, number one. Number two, we are paying advance tax by due date. Having this said, we will reduce the interest cost at minimal level. Hope this benefits you, and share this to your friends, and follow me on Instagram. My hashtag is tax wisdom. Thank you so much.